All right, welcome to the daily market recap for Thursday, October 16th. In today's video, I'll be going over the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like I do with every daily recap. So if you guys enjoy the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting off with the NASDAQ, down 0.4% today. But really, the story is just the volatility. And from Friday's distribution candle, we've had very wide daily bars without any price progress. We had the gap up on Monday, which is kind of a snapback after being down 3.5% on Friday. From that point, we've just chopped sideways. Every time you feel like you should be bearish, the market has bounced. Every time you start to feel like you should be bullish, the market has pulled back. So really, I think if you want to be like a short-term trader, if you're a day trader, you love this environment. If you're a swing trader, this is just not the time for you to get aggressive in really either direction. There's been some opportunities on the short side, some opportunities on the long side, but this is a bunch of chop. Anyone who knows the direction that this is going to be breaking out of from Friday's range, let me know because I don't. But really, until we see volatility cool down, until we see some trending action, I'm just going to be playing everything with smaller size. S&P 500, similar action, closed under the 20-day moving average as well, down 0.7%. That's a little bit weaker than the NASDAQ. IWO, the growth stocks of the Russell 2000, had been acting extremely well. Today, down 2.1% on a big pickup in volume. First close back under the 5-day moving average since, what would that be, Monday? Bounced off the 10-day, just made a new 52-week high yesterday. So overall, this is still in an uptrend, and this is one of the charts that is keeping me somewhat bullish, while the NASDAQ and the S&P 500, if I had to pick, I would lean a little bit more bearish. ARKK, just kind of another risk on, risk off indicator that I use. Above the 20-day EMA, usually a risk on environment. Below that, risk off. And today we undercut and reclaim the 20-day and the support gap, but not by much. Definitely just like a lot of volatility here. Still technically risk on along with IWO. But the other thing that's kind of keeping me risk off is the chart of Bitcoin and Ethereum. So crypto, typically a risk on indicator. Bitcoin right back towards that liquidation levels of last Friday, coming into the 200-day moving average. I expect to see a bounce at that point because we've bounced there a couple different times. But if we don't, this now looks like a false breakout. We kind of have this H pattern, and losing the 200-day would not be great. Ethereum, kind of similar action, not quite as weak down to the liquidation area, but this chart, I wouldn't really say is in an uptrend. We're putting in lower highs, we're putting in lower lows, kind of a risk off signal to me. Getting into the liquid leaders, I did replace Robinhood with Micron. So Robinhood, I actually tried this trade today. We had two closes under the 20-day moving average, then a gap up to start the day. When I took out the opening range highs, I took that trade and got stopped out basically immediately after we took out the lows of that pullback. Overall, I don't think this chart is broken by any means. Like we could get a gap up tomorrow and then that would be tradable versus today's low. Um, but a little bit of weakness closing under the 20-day moving average. And then MU, just phenomenal action. And a name that I've really done a poor job keeping track of lately. But new all-time highs today, up 5.5% on a pickup in volume. Really strong close compared to the indexes. Great relative strength overall. Definitely deserves its spot on the leaderboard. BE just kind of sideways chop down 1.2%. Still some air to the 5-day moving average and at that support gap. Tesla, another uppercut and fail of the resistance gap highs, closed back under the 5 and the 10-day moving averages. This I expect just to chop until earnings, which is October 22nd, so 6 days from now. AMD, really strong action overall. Higher highs, higher lows, closed down 1.7%, but some of the other names in the market were even weaker. So overall, I like how this is trading. Big expansion bar up on big volume, pulled back while the market was weak. Can't argue with that. but then two really tight days followed by another expansion and pickup in volume, one of the stronger stocks in the market. NBIS pulling into the 10-day moving average with below average volume. That's the type of pullback that you want to see. I don't love the unfilled gap down on Monday. That is not ideal action. That's the only strike against that chart. KTOS, another leader that's under the 20-day moving average. So we removed Robinhood. K2S first closed definitively under the 20-day. We'll see if we follow through to the downside. There are some gap zones here, so pulling in to like 86, probably a good risk reward spot. Usually when the leader pulls back to the 20-day for the first day, that's right around the 20-day, not exactly the 20-day moving average. Finding a spot around there is usually good risk reward, but the market is kind of choppy right now. Rocket Lab still closed over the 5-day moving average, down 3.3% on lower volume than yesterday. Good chop here. LEU, we did see some leakage out of Oklo today. LEU down 4.5%. But again, a lower volume day than yesterday and still a close over the 5-day moving average in the support gap. OKLO in that same group, a little bit of weakness closing at the 5-day moving average. That really got extended yesterday at the high of the day. But overall, the theme doesn't seem like completely done. And then MP, gap down off the highs, not great. And then two lower volume pullback days, kind of just into a breakout retest area. So overall, I don't see this as too bad. A lot of the precious metal names that got like wildly extended have seen blow off tops, like UAMY. That was a trade that I took. Really nice move on that. Hopefully, some of the air is getting let out of these precious metal names. We kind of pull back, find a bid at either the 10-day or the 20-day, and then we can start building some higher lows. Getting into the industry ETFs, the first one is gold miners, GDX, another new all-time high, second gap up in a row, second pickup in volume in a row. Definitely getting stretched to the long side here. We'll cover this in the short setups. Semiconductors, great strength today. Only other group that was positive on the day, up 0.5%. Bounced off the 5-day moving average and closed relatively well. Did take out the high of the day from Friday briefly, but still a good sign overall. Ideally, we can push this range and continue higher. A couple other themes that I wanted to point out. Biotech, still really strong. Got ahead of itself a little bit and then reversed, closed kind of lower half of the range, down 0.4%. Pull back to the 10-day in the gap zone, right around 105 would be interesting. And then if we go into more of a correction right now, this 102.90 spot, along with the 20-day moving average, is the other spot that I would watch. IGV, the software ETF, another close under the 20-day moving average after uppercutting and failing at the resistance gap. Which way we break and close, either above the resistance gap, good for the market, below the support gap, bad for the market, I think is going to be a good indicator. A lot of the kind of real economy stocks have continued to be weak after like a 1 or 2 day bounce. Home builders uppercut and failed the 10-day yesterday. Today closed at the 5-day moving average. XLP consumer staples uppercut and fail at the resistance gap, now starting to roll over. This feels like it's starting its stage 4 decline. You have your stage 2 top, stage 3 base, or stage 2 uptrend, stage 3 top, stage 4 decline. Basic materials also just hovering right at that 200-day moving average, putting in lower high, lower high, lower high. And what was the other one? PEJ. Yesterday, uppercut, the 50-day moving average followed through the downside today. XRT, similar action, little uppercut of the 50, followed through today. Did so on lower volume, lower than average volume, but still not the type of price action that you want to see. ITA, aerospace and defense, which has been a leader off the lows, starting to see a change in character there. We had 2 down days where we closed back under the 20-day EMA, little bounce back, and now a secondary close under there. We did bounce at the support gap, and that's kind of my line in the sand to consider this to be in a short-term uptrend still. A close below that, and we'll probably need a new base. Any other? Oh, XLF. Can't forget this. This is the biggest warning sign for me, and the biggest reason why, if I had to guess, we're more than likely going into a correction right now is financials are starting to break down on big volume. We had a huge move down on Friday, down 2% on big volume, rallied back up with some earnings into that 50-day moving average, but rejected at the resistance gap. Today, gap down. Regional banks got destroyed today, and financials down another 2.8% on even more volume than what we saw on Friday. Feels like something is breaking in the background. I don't know what it is just yet. I mean, outside of the economy, I think this is just kind of reflecting that. But we'll see if there's any breaking news on why financials are getting so weak. The nuclear stocks still closing above the 5-day moving average on a declining volume. That's really great relative strength, even though it's down 3.4%. And then the cannabis ETF continues to uppercut and fail this resistance gap. It's putting in a nice cup and handle, and anyone who's trying to buy this on strength is getting really frustrated probably at this area. That's why we draw the resistance gap, so we know not to buy into those areas. Little undercut of the lows of this area in a reclaim, maybe even a pullback to the 50-day. That would be a spot that I'd be more comfortable trying. But it does seem like this is a theme that's turning around. We had a 200% move off the lows, now putting in a cup and handle. We'll see if that rescheduling goes through. It is Thursday, which means we have an updated number for our NAAIM, except they did not update their website. We have October 8th data of 84.57. And thankfully enough, if you download their Excel sheet, then you can see this week's data, which is basically unchanged. It went from 84.57 to 84.87, so 0.3% increase. To me, that is meaningless. Over 95%, and I kind of use this as an indicator if things are a little overbought. So start to look for stuff on the short side or don't play breakouts as much. At 85%, it's just kind of not not or it's an indicator that's not giving a signal. Getting into the long and the short setups, we'll go most liquid to least liquid. Because of where we're at in the market, and until we break out of this range to the upside, I want to be buying when I feel like selling, and I want to be selling when I feel like buying. And we've started to see a lot of the kind of risk on type names start to break down. The quantum names really were the focus today. We had, let me get this up. We had IONQ, well, RGTI has been the leader. First gap down day, down 15%, bounced off the 10-day. IONQ, which is the one that I chose to short using IONZ, losing the 20-day EMA and the support gap, closing at the low of the day. Really nice to see this roll over after making new highs and then a gap down. The short was up here right around 78 on a loss to the daily view app. That's been a super easy trade. And we're just starting to see a lot of these extended names come back. We're seeing really choppy action in the market. So I don't want to be buying strength in a market that is punishing momentum. I will buy undercut and reclaims. I will short stocks on weakness. I'll short stocks on uppercut and failures, but I will not be buying strength until the market starts to reward that again. So with that in mind, Palantir, not trying to buy on strength, trying to buy a pullback, undercut of the support gap of the 50-day or of the HVC from earnings, and then manage risk against the 50-day moving average and the low from Tuesday. NBIS, don't love the unfilled gap down off the highs. That is another thing I look for. If we have an unfilled gap down, I don't buy anything on strength. I look to buy it on a shakeout. So this 20-day moving average and the support gap right at 115.80 is the spot. And then use 2 or 3% stop or whatever the low of the day is when we reclaim that area as your stop. Rocket Lab, one of the better acting stocks in the market. Still don't want to buy it on strength. Would be looking for a pullback into the 10-day moving average. And if the market is to break down even more, the lower end of the support gap, right around 60.50, would be ideal because then I can manage my risk against the 50 or the 20-day EMA. HIMS, big move yesterday, up 16%. And then some weakness today, down 5.7%. I think it's down a little bit after hours. Trump said that the weight loss drugs are coming down. He also said energy prices were down, so I don't know if he knows what down means. What I would be looking for here is an undercut of the 10-day moving average and then let it build out some higher lows intraday, reclaim the daily VWAP, reclaim today's low, and that would be the entry point. Then I would manage my risk with a stop under the 10-day and whatever the low of the day is. If the market's going to continue higher at all, this is the type of base, like this is the type of stock and the type of base that could start to break to the upside and be kind of a last squeeze. Because it's not a tech name, it's in healthcare and healthcare adjacent names I've covered in these videos is kind of the group that I think is next to go. And maybe it's not ready right now because maybe we're heading into a correction, but the next group to actually have a clean uptrend, I think, is going to be like healthcare and healthcare adjacent names. We've already seen biotech stocks take off. We've already seen the genomics ETF really start to show some strength. That is why HIMS is still going to be on my radar. Reddit, this has been a really weak stock, and it could just break down from here. But the fact that it's not breaking down, it undercut and reclaimed the support gap today. And we have a 3-day pivot. That is something that I've been working on more and more is not to throw stocks away out of my universe when they're below a 50-day moving average. Now, ideally, like it's only for a couple days and the 50-day is still uptrending. This one is kind of going flat here, so I don't think it's the highest probability setup, but through today's high would be viable versus today's low. If we come back and undercut the support gap, that would be even better because we could manage our risk really tight. Um, Not the highest conviction setup, but something that I'm watching. It feels like everyone is like off Reddit and they want to short it because it's been relatively weak. I think that's fine. I think it's already made a pretty big move down. Can it go lower? Absolutely. But we'll see. Like through those highs, stop at the lows would be the trade there. CRISPR, this goes back into the healthcare adjacent names. Just looking for a pullback into the support gap, 66.15-ish area. Manage our risk against Tuesday's low there. Pony, this was a really nice winner for me back in September. I sold it on Friday, and I'm okay with that sale. Um, I trimmed into strength and stuff, but I sold the rest on Friday. And this still isn't like taking out Friday's lows. It's still chopping sideways. And look at the volume on this pullback. It's extremely light compared to all the accumulation volume. So if things are able to get smoothed over with China, this is the first name that I'll be putting exposure back on. Look for either an unfilled gap up and then a opening range break, manage our risk against today's low, or just through today's high. At that point, I would want to manage my risk with the daily low. I wouldn't want to give it all the way to today's low. AAOI, kind of similar to HIMS with just like a big base. It has been really punishing anyone who's buying this on strength. It's been rewarding people that has bought it on weakness. So I want to buy this on weakness. Very similar to that HIM setup. Pull back to the 10-day moving average, build out higher lows intraday. Recapturing the daily VWAP would be the entry. Stop would be whatever the low of the day is. If the market like really rolls over, then we've got the gap zone at 28.50. That would be the secondary spot that I'd be watching. SEDG, solar stock, that is still on my radar. Looking for a pullback into the 10-day moving average and gap zone. Solar stocks continue to be extremely strong. This was buyable on Tuesday as well on this little undercut of the support gap. Perfect reaction at that spot. I've talked about how solar has bottomed since, what was this, June 17th, and I have not made a single cent trading solar stocks. It's been extremely frustrating, but I'll keep it on my radar. I'll keep trying to get in these names. I haven't put on a trade in the theme yet. Uh, so eventually we'll get in one of these names. TMGX is another healthcare adjacent name. This was on the watch list coming into the day through today's high. That was green as well. I know it's a little bit weak after hours, so a gap down, then a reclaim, like a red to green move, that would be buyable. And then I would want to keep my stop at whatever the low of the day is. Keep that nice and tight because if the overall market's going to correct, this setup isn't going to work. But if we do start to build some higher lows in the market, this is a name that no one's talking about, really building a nice cup and handle, couple waves down, shaking out the weaker hands, and now starting to build some higher lows. Then last, CLPT, nice little pullback into the 10-day moving average. Inside candle today, positive on the day, up 1.8%, while the rest of the market was pretty weak. Through today's high would be the buy spot. Stop at today's low is the entry, or is the trade. On the short side, first up, we got Costco. This was a perfect uppercut and fail of this resistance gap yesterday. That was probably like the A plus spot to get it at. Then we had a huge distribution today, down 3.1%, losing the 5, the 10, the 20-day moving average. We have this support gap, meaning I don't want to buy or I don't want to short it like into this area. What I would want to see is a rally back up, and maybe this doesn't happen tomorrow. Maybe this is something for next week, but like a rally back up close to the 50-day moving average where I can manage my risk against today's high of day. So it's one of those stocks that had a big stage two uptrend, big stage three top. Eventually, with weak consumers, this is going to have a stage four decline. But you don't really get clean stage four declines while there's still support gaps. So either we close underneath that and then can rally, put in a lower high, or we rally back up towards the 50-day, manage our risk against that high. That would be the way that I would play that. So gold miners, gold in general, I saw a tweet where people are just lining up to buy gold at this point. Um, just like the quantum names, it seems like everyone wants to short these right now because it's so extended, and I do too. It's something that I'll be watching for, but just like the quantum names, like you can take the trade, but if you don't get traction, you need to get out right away because in this acceleration portion of the trend or the parabolic portion of the trend, the last couple of days of this move can like really do some damage to your account if you're being stubborn. What I would want to see here is another big, massive gap up, and then a loss of the daily VWAP as my first entry, a loss of the daily low as my second, or the opening price, right, as my second, and then a green to red move as my third. So kind of build into that position as you're gaining traction. That's what I did with my IONQ short. And then stop would be whatever the high of the day is. I'll probably be just using dust because my main trading is in a retirement account, so I can't short individual stocks. So I'm watching this DUST, like a gold miner's like 2x bear. Lots of volume coming in, but the price keeps dropping. Well, hopefully we can get another just massive gap down tomorrow on this and then start to build into it. BE, so one of the things that I'm thinking is if we do go into a correction, anything that's showing relative strength right now is just going to be the next groups that get hit. We've seen that the last time we had a correction. Anything that showed relative strength was just the next group to start to go lower. And BE with the super tight price action today will give you a nice risk reward to the downside. This is a name that's gone from $15 up to 125 in just a couple months through today's low. So we have to decisively move under the support gap, decisively take out today's low. That would be the entry. Stop at today's high on that one. QBT. So we saw the quantum names really start to roll over. Uh, like I said in the last video, like if you do have a large just margin account and that's the main account that you're trading in where you can short individual stocks, I wouldn't have been focused on IONQ. I wouldn't have been focused on RGTI. I'd be focused on weaker names within the theme like QBT, which never made a new all-time high. We uppercut and failed at this resistance gap, followed that with a gap down that we couldn't get through, rallied back up, another lower high here, and then today really started to unwind, took out the lows of all of this, and then closed relatively lower in the daily range, nearly the low of the day. This at some point there's going to be a bounce in quantum names, so that's where I would want to get positioned on this. A little uppercut of $20 that would align with the 20-day EMA. Uppercut and fail at that spot would be shortable versus the high of today. Other names that aren't actually quantum names, but that are weak. QMCO, that one's a little bit thinner. QSI, I did take a short in my small margin account on this on the uppercut and failure of $3. And then what was the other one? ARQQ. Yeah, ARQQ. This would have been like a main focus, down 26% today. Not actually a quantum company, even though they have quantum in the name. That's the type of market that we were in. Same kind of thinking with BE for this SNDK. Huge move from 41 up to 144. Today, great relative strength, and this could go higher. I don't want to short it if it's going higher. I want to see a move down, take out today's low as this short entry, stop at today's high. My guess is this is just relative strength that turns into the next pullback because we're starting to see these extended names really start to unwind now. FPF, this is one of the Argentina stocks. Argentina, like as a country, like all the stocks, all the most liquid stocks in that country are in stage 4 declines. This one had a little rally up to the 50-day moving average earlier in the week, now getting nice and tight on the key moving averages. This might be a higher low overall, and maybe I'm just late to the party shorting these names. But through today's low, stop at today's high would be the trade there. MMYT, this has been on the watch list for a very long time. Big stage 2 uptrend, big stage 3 top, multiple tests of the declining 200-day moving average. Yesterday, we closed under the last support gap in the entire structure. And once that goes in stage 4 declines, you get very clean action to the downside. Today, this is a slow moving stock, and today this was down 2.4%. I assume that this is going to continue lower, but a little rally back up to $90, that would be an entry, then just manage the risk against the 10-day EMA. Then last, we have ZEPP. This is one of those crazy names that went from $2 up to $60, has hung in there as best it could. Last week, we had the big distribution bar down 20%. Now just kind of a bear flag higher, still showing relative strength. So maybe you say this is a higher low. Factually, it is still potentially a higher low. But to me, this is just a bear flag. People have forgotten about this name. Through today's low would be the entry, stop at today's high. So that's going to be the daily market recap for Thursday, October 16th. I hope you guys enjoyed the video. If you did, leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys in tomorrow's video.